Good morning. It's 10 a.m. on Tuesday, May 19th, 2020, and this is 10 on Tuesdays. As part of a series on sales and use tax audits, we are pulling back the curtain on audit negotiation for today's discussion. I'm Holly Hoffman, founding partner and CEO of the Sales and Income Tax Advisory Network. Prior to creating my company last fall, I worked for the Wisconsin Department of Revenue as an auditor, speaker, and sales tax specialist. My passion is to help provide sales tax education and support to tax professionals, businesses, and through associations, trying to build a network of empowered taxpayers. For more information, visit salesandincometax.com. Thank you for joining my web chats 10 on Tuesdays, every Tuesday from 10 to 10:30 a.m. 3 weeks ago, I started a topic series about sales and use tax audits, and we are continuing on that topic today, discussing audit negotiations. You can check out previous episodes on my 10 on Tuesdays channel. To find the channel, go to salesandincometax.com/event and click on 10 on Tuesdays. You will find links there for registration and the 10 on Tuesdays channel. Every week I say how important each topic is. But honestly, negotiation is a necessary and crucial step in the majority of audits. This is a point in the audit where you close the gap between what you feel is fair and what the state has assessed. To understand negotiations and be prepared, you need to know what is negotiable, who you will negotiate with, and how to negotiate effectively. Last week, we discussed the audit process, and let's just review what leads up to the point where negotiations take place. So the auditor reviews your records in the field and provides you with the preliminary schedules. Now remember, these schedules include much more than what will actually be assessed. So you have to work diligently to get all the items removed that you can, where you adequately explain and provide documentation to get them removed from those schedules. When the preliminary schedules are cleaned up as much as possible, the auditor is then going to present you with the proposed audit report. This report provides all the remaining adjustments and calculates tax due, interest, and penalties. This is the point at which you begin negotiation. But I want to stress to you to push to get as much removed from those preliminary schedules during that stage. Otherwise, your position of power is going to be significantly reduced. And what I mean is the auditor, DOR, will feel anything you take off now is part of the negotiation, and it chips away at the expected assessment amount. So if items are coming off because you had more records to provide, you will have less leverage to negotiate items that require negotiation. I'm not saying don't provide records at this stage. If you have them and you need to, yes. But in planning your audit progression and what you do at each stage, you want to make sure you get in as much documentation as possible in the previous stage, in the preliminary schedule stage, prior to the proposed audit stage, okay? Now, in reverse of that, if you can get the auditor to negotiate during the preliminary schedule stage, it takes some finessing and some auditors catch on to it right away. But if you can get it to happen, it puts you in a very strong position when it comes to the proposed audit stage. Because at that point, negotiations start fresh, and those prior negotiations don't get included in what the auditor thinks they gave up to you. So if you can do it, that is great. In previous episodes, I talked about being strategic and focusing on certain things to use your time most effectively. Well, let's apply that to negotiation. So you just received the audit report and see total amount due. Oh my God, you're about to have a heart attack. You can't afford that. It's way higher than you expected. And that's how it always is, right? But I need you to focus because you're not negotiating on the total amount due. The amount due is made up of multiple adjustments, interest, and possibly some penalties. The fact that you can't afford to pay is not going to be an effective argument. So let's focus on what makes up that total amount. I'm going to start with interest. Interest is not negotiable because it's dictated by state statute, and DOR doesn't have the authority to adjust the rate. So just putting that out there. How do you reduce interest? You have to reduce it by reducing the underlying assessment upon which the interest is charged. There's one situation where you may negotiate interest. If you're a non-filer, meaning DOR has determined that you were required to hold a seller's permit, but you weren't registered at the time during the audit period, that means your audit period is going to be a 6-year audit, and the interest rate will automatically be the 18% non-filer rate instead of the regular 12% rate. There is room to negotiate from the non-filer rate, from the 18% rate down to the 12% interest rate. That's the only time you can negotiate, and that's the only authority DOR has. They can't change 18% to 15%. They can't change 12% to 9%. They can't do any of that, but that is one possibility where you might be able to negotiate. Things that are negotiable include tax assessed, the adjustments made, and the penalties. And of course you want to reduce tax because interest and penalties are calculated on that amount. So a significant focus should be there first. However, when you've negotiated what you can on tax adjustments, but are still at a total amount due that you can't work with, look at reducing those penalties. Unless your audit has minimal adjustments and little tax due, the 25% negligence penalty will be applied. It's basically automatic. This is absolutely negotiable. I highly recommend discussing a reduction. DOR does have the authority to reduce the rate. So you may argue a variety of options on how you want to reduce it or approach it. Depends on the facts of your audit. But you could do an overall rate reduction, like cut the 25% rate in half, or you can negotiate to have the penalty applied only to certain adjustments in the audit. So it depends on the angle, it depends on what the facts of your audit are, but there's many ways you could approach that. So think creatively. Again, if cutting the rate in half gets you less of a reduction, then negotiating to have the adjustment only apply to certain adjustments, having the interest apply to only certain adjustments. And clearly, you want to do what gives you the biggest reduction. Argue that. All right, you're going to want to keep a good relationship with your auditor because that's who you're going to be negotiating with. So while I was in auditing, I really started the proposed audit stage with a completely fresh mindset, and this is important to understand. My goal moved from finding documentation to support the correct amount of tax due to simply the goal of successfully closing the audit. And by successful, in my mind as an auditor, it was with full agreement and hopefully with a check. So there's a huge difference in motivation on the auditor's part. You should also change up your mindset and your approach to the auditor in this stage. So knowing what motivates the auditor is how you approach it. Now the auditor will be working behind the scenes with obtaining supervisor approval on any settlement offers. So the supervisor is involved in this process. If you are at an impasse with the auditor, like a real impasse, and you feel you have a strong argument supported with documentation and reason, then you can reach out to the supervisor. You have the supervisor's contact information, remember, from the first letter you received from DOR notifying you of the audit. And I told you you want to hang on to that because the supervisor's contact information is on there. And this is when you would be using that information. You'll need to lay out your argument clearly and concisely with the supervisor, along with providing any supporting information you have. So if you do begin to negotiate with the supervisor, you want to make sure you have things in order You don't want to just go, well, this isn't fair. I shouldn't have to pay this much. You want to have very strategic approach to working with the supervisor. The other thing I want to say is sometimes pushback from the supervisor or the auditor on an adjustment is because that they also have to apply settlement offers and how they apply tax and audit based on consistency across all audits in Wisconsin. So if you're a landscaper and a certain item gets assessed, they will negotiate, and negotiations will be based on how they treated other landscapers. And that can work in your favor or against you. So if they've been lenient on penalties for unregistered landscapers, well, clearly that works to your benefit. If you're a gaming machine operator and you underreported income and they haven't been lenient to other gaming machine operators, they're going to keep the same treatment for you. So regardless of the facts of your case, you're going to be treated just the same type of assessment and penalty as the other gaming machine operators in the state. So understand that's part of why the supervisor is involved and does the final approval. Now we've talked about when to negotiate, what can be negotiated, and with whom to negotiate. Now let's talk about negotiating effectively. Now every audit's different. Every situation has its unique set of circumstances. The adjustments you will be negotiating are not new to your discussion with your auditor. You've been discussing them during the preliminary stages. So in addition to your knowledge of the transaction, you will use what you heard the auditor arguing to you to help you determine the best approach. So I can't give you a cookie cutter argument to use that works every time, because there isn't one. But I can provide you different ways to support your argument that creates a much stronger and more persuasive argument. These are things that definitely sway DOR and are reasonable arguments to accept during negotiation. When you're arguing, listen closely to the auditor's response. Remember to put yourself in the auditor's position, and it will help you to better articulate your reason, or maybe you might get cues to take a different approach. And I want to give a side note here. There's always exceptions to exceptions to exceptions in tax, but sometimes you can point out flaws and errors and the auditor just doesn't respond to any argument. So it's like talking to a brick wall. This may not be anything more than an issue of the auditor not fully understanding the tax law related to the adjustment, or the audit process or method that was applied to come to the adjustment. And unfortunately, this can be frustrating, but I need you to keep your cool. You're going to need to clearly identify the issues and raise your concerns with the supervisor, and possibly beyond if needed, depending on what the issue is. There's certain areas, contractor tax law, that you may find you can't discuss it with your auditor, you're not getting anywhere. You raise it to the supervisor, you're not really getting anywhere. Then you're going to raise it further. Okay, and there's nothing wrong with that. When it gets to complex issues, that's just what you need to do. The best and most successful arguments are supported by law or guidance put forth by DOR. I call that published guidance. If you can find that for your adjustment and the law supports your stance, or is in opposition with what the auditor's stance is, cite the law, cite the statute, the administrative code, or the published guidance. And I don't think right now you can really fully rely on published guidance. Long story, but I think it still weighs in the audit, it still has some weight to it, because if DOR felt that was policy, and if DOR felt that was the right thing to do, and they told everyone that was the right thing to do, I think that's going to weigh heavily in your argument for a negotiation. Maybe you attempted to follow DOR's guidance and found out what you were following is different than other published guidance or tax law and code. Point this out and request leniency. So just keep that in mind. If you were following one thing and your auditor says, no, right here it says this, compare, and talk that through with your auditor. If you have adjustments for very complex tax law or gray areas, this in itself is an ideal argument for negotiation. One way to recognize if you're in a gray area or a complex area is if your auditor had significant difficulty in auditing or telling you why they were assessing the items they were assessing. If they have trouble showing you statutes or administrative code to support their adjustment, if they waffled in whether something was taxable, they didn't seem to understand your business, this is all prime arguments to settle. Maybe reduce assessed tax by a certain percentage. And it really depends on the situation and what percentage that would be. From my personal experience, it could be anywhere from an 80% reduction, 50%, 45%. It just really depends on the facts of the situation. Certain industries face really complex tax law. We have contractors, landscapers, manufacturers have some pretty complex tax law they deal with, printers, advertising, and sometimes it's not your industry, but certain significant purchases you make. Software as a service, those are things that are generally expensive or reoccurring, and those are definitely complex. Even DOR has a hard time applying tax law in those areas, and I would negotiate them. If you can show that you've had a pattern of compliance or an effort to comply, this is an argument for negotiation. So our whole tax system is based on voluntary compliance, and DOR rewards people for voluntarily complying. If they know they're going to be getting the tax revenue going forward, if they know that you've done your best to pass over the proper tax amount to them, they're going to work with you a little more. So it's more important for DOR to get the money going forward if they feel you fully understand the situation. So depending on what it is, showing a pattern of compliance or an effort to comply or understanding of how to comply going forward can have a significant impact for negotiation. And so as I'm going through these, I'm just thinking, you don't have to pick one for each adjustment. Maybe it's a combination of a couple of these. I'm just telling you really good, strong arguments to use. In all cases, you want to support your arguments with corroborating facts and documentation. Just be creative in how you figure out how to get documentation to support what you're saying. Maybe you're missing records. If you can show from more recent years what the pattern is, or what vendors did, if they charged tax, didn't charge tax, just things like that. Just be creative. Maybe you can recreate records. Maybe you can show from other records that you have on the situation, like I talked about proving delivery out of state, but you look at vehicle logs or employee timesheets, anything you can to show that your argument is supported with some corroborating facts and documentation. And just so you know, unfortunately, the law states that all sales are taxable unless proven otherwise. So the burden of proof is on you, not on DOR. So I know it's frustrating. DOR is coming at you with, this is what we're going to assess. And you feel like, well, if they can't explain their situation, why do I have to explain mine? And why isn't this documentation good enough? Just understand that the liability legally is on you, the taxpayer. So kind of wrap your head around that. And I understand your frustration. I had an attorney once. It wasn't for tax purposes, but he was a very wise man, very kind, very expensive. But he used to remind me often that the law and courts are not about what's fair. And it's hard to absorb that when you're personally involved, when your life and livelihood are at stake. But once you come to terms with that, you approach things much differently. You become very strategic and think in terms of what ducks do I need to get in a row to make it impossible for them to deny my argument. Basically, you're beginning to play their game. But accepting that the law is not fair also adjusts your expectations, which is really good. If you're at this point in the audit with an assessment, you need to understand that you're going to pay some amount. You're not going to get it reduced to zero, or if you have a $50,000 or $100,000 assessment, you're not going to get it down to $1,000 or $5,000. If certain adjustments are accurate, be objective in your mind. If certain adjustments are accurate, decide in your head. Doesn't mean you have to tell the auditor, why I'm going to cave on these, but decide in your head that you're willing to accept that assessment. And then you can use that as leverage to win arguments on larger negotiated items. Because remember what the auditor's goal is. They want to close the audit successfully with your full agreement. They want to walk away with a check. So the auditor is looking for that sweet spot of getting as much assessed as possible with getting you to cut a check and fully agree at the end of the audit. So just think of it in terms of that. So those are arguments for adjustments, but those also can be used as arguments for reducing penalties. And again, I suggest argue the adjustments first, then turn to the penalties. Penalties can be argued using all those same tactics, but also you can argue the relative size of the error and unusual circumstances that cause the errors for penalties. A basic argument to effectively reduce penalties is that the adjustment is a relatively small error in relation to total sales or purchases. So say you have $1 million in sales for the year, and you made some kind of mistake. You should have been charging tax on product A, and you didn't realize you missed it. It wasn't taxed, so you owe tax on that. And say it comes out to $5,000 for the year. So you had $1 million in sales, but the adjustment is $5,000. 5,000 times 4 years is $20,000. But I still believe it's a relatively small error in relation to sales. Usually in the audits, it's crystal clear situations like this. But look at that. And maybe it's the dollar amount. Maybe it's the quantity of transactions. Like, this doesn't happen very often. It was a mistake. It was a larger dollar amount, but it doesn't happen very often. It just depends on the situation. Another thing is you can also request the penalty to be only applied to specific adjustments. So penalties, that's a 25%, maybe it's a 50% adjustment. And initially, DOR may start out either applying it to all purchases and sales. It may be to apply to all purchases. But you can look at whether or not, well, maybe I had an error here that, maybe warranted some type of penalty. But these other adjustments were not it wasn't negligence, So try to negotiate that. Why not just focus the penalty on these adjustments only and not apply it to these other adjustments? Because these other errors really weren't negligence. And that's going to reduce the amount of the penalty calculated because you're reducing the tax amount it's calculated on. Okay, sometimes there's unusual circumstances. And if there's unusual circumstances, you want to point them out and hopefully use them in your negotiation. But unusual circumstances still require some corroboration, some documentation, some support. So, for instance, I had an audit of a gaming machine operator, and there was theft, not surprising, not shocking, employee theft during the audit period, and it caused underreporting of sales. So I said, well, I'm not surprised. Okay, let me see the documentation. Well, the business owner didn't write up the employee, didn't file a police report. I mean, it's very hard to prove theft, employee theft. And so they were thinking at the time of, let's just stop this bleeding, get this employee out of here to avoid further losses from this employee stealing. But keep in mind that for tax purposes, for income tax, for sales tax, you need to show some type of documentation or record that these events happened. How much were you short then? What can you attribute to that employee? Was there a police record filed? Just things like that. If there is nothing, well, it's hard for the auditor, it's hard for DOR to say, okay, well, then we'll reduce. Maybe it works, maybe it doesn't, but keep in mind, keep records and documenting unusual circumstances. I've also seen managers who have on their own mismanaged, misreported, and the owner took corrective action and got rid of them and adjusted and did their best. And I'm like, well, I understand that. And they did, the owner did their best. So I gave a little leniency for that. I've seen partners embezzling or employees embezzling. Some of that is still required. It depends on who's liable for the tax, where you go, but sometimes it's cause for negotiation. DOR just wants the actual tax owed to be paid, some interest and maybe some light penalties. So it just really depends on the situation. But just think of if these audits occur or if these issues occur in an audit you have, to explore those areas. And if those incidences happen in your business, document. So you want to be strategic, pick your battles, be willing to compromise, understand tax law is not fair. The onus is on you to prove what is not subject to tax. And just keep the big picture in mind. Don't get hung up on the one little thing to the detriment of the rest of your issues. And I know this has an impact on you because you're going to be paying money, but just keep in mind, it's not about winning and being right. It's about damage control and doing what you can to reduce the impact of the audit. So get a little objective about it and try to keep your emotions out of it as much as possible, because it's not going to help you in your arguments. And I just want to suggest, really important, don't wait until the proposed audit report stage to bring in a tax professional to help you. I talked extensively about all the stuff you can do during the preliminary schedule stage and how that directly impacts where you start the proposed audit stage and establishes leverage for negotiations. If you bring your tax professional in at the last stage, not only does your tax professional have to get caught up, they're short on time then for getting the actual documented reductions that you should have gotten in the preliminary stage, but then their leverage is significantly reduced for negotiations. And you want to try to resolve your audit without needing to appeal. Appeals should be for adjustments made improperly, that you can show conflict with law, and that there is a disagreement at the close of the audit and you're pretty sure you're right, so that you take that law argument forward to appeals, or for adjustments upon which you have additional documentation that wasn't already provided to the auditor during the audit. So maybe the auditor closed the audit without addressing your documentation due to statute of limitations running out, or documentation came too late in the audit process. If you have a reason to appeal, note that you only have 60 days from the date of the notice of audit assessment to appeal, to file that appeal, okay? 60 days. And also keep in mind that you have a new 2-year statute of limitations. It's not a new law, it's just your statute of limitations starts anew for a 2-year period after your notice of audit assessment. Any tax assessed in that audit. Not anything in that audit period, only tax that was assessed. A new 2-year statute of limitations starts. A new time clock starts. And if you obtain exemption certificates for any sales assessed, or you find documentation receipts or something for purchases, you can submit them in a claim for refund for up to 2 years after the audit assessment. So that might be worth pursuing. If you have any questions or would like to contact me or book time with me, you can do so by going to my website at salesandincometacx.com. I want to thank you so much for joining me today. I'm working hard to schedule some great guests for future episodes, so connect with the Sales and Income Tax Advisory Network on social media to learn about upcoming guests. And to view previous episodes of 10 on Tuesdays, go to salesandincometacx.com/event. Check out my 10 on Tuesdays channel. And I will see you all next Tuesday for a new episode. Thank you.